brother. Happy Tuesday. Welcome, welcome, everybody. We have just gotten a week started, holiday shortened week, but that has not caused for lack of excitement. You got the markets wiggling around quite a bit today, mostly to the downside. We'll talk about that in just a second, but if you're just joining us, first time ever watching us, we got a class coming up on June 9th, budgeting class. The specifics about your budget, not messing around with this one. We're going to go in great detail. Go to the website, check it out if you're interested. Of course, free for all of our customers. Tonight, for our customers, remember, we're going to do our class on how long the market corrections last. So grab a glass of wine with me, 7 p.m. Eastern. The link should be going out about 6 p.m. Eastern for you to join us. We'll just be hanging out, having a good time, trying out some of the new equipment that we have here at Jazz Wealth, trying to stream that live. I hope everything goes well. We're sort of winging it with this as we learn, but that'll be tonight at 7 o'clock. Lots of great stats on that. Really, really important and good timing for the markets to fall, so we can show you how that's done. Of course, if you're considering using Jazz Wealth, go to our website. Click on portfolios there in the menu. You can see the different funds that we offer that we manage. We do not send out to somebody else. We manage those, but better yet, you could see the performance as well as events that we have. Be sure to check out all those events coming up. Okay, you want to know why the markets were lower today? It was not because of what's going on in Italy, though not good, right? So between Italy, Brazil, Argentina, Venezuela, there's some real concern here. Now, the media has not focused on it because it's all about, you know, go get Trump, and then Trump fights back, and then, oh, this thing's going to be good with China, whatever. So the media has been focused elsewhere, but really in Brazil, Venezuela, Italy, and man, it's not looking good. So if that starts to make more of the forefront, more of the headlines, then of course that's going to drag us down. But why the markets were lower today, this happens all the time. This is really interesting. So one news event causes a little bit of concern. If you look at the futures market last night, the futures markets were actually up. Everything was fine. And it wasn't until the news cycle started that really sellers began to sell. And so what happens is on a day like this, when people decide, when there's something to focus on, something negative that the media focuses on, every company on the planet comes out with all the bad news that they already had built up, right? You never want to announce bad news when the markets are doing great, everything seems pretty optimistic. You want to say your bad news when everybody else is saying their bad news. So to give you an example, Morgan Stanley came out and said wealth management business and overall business is slowing down. JP Morgan came out and said their trading revenue is going to be lower. Weren't we just talking about this? Weren't they just optimistic about this? Like 3 weeks ago, they were going crazy about their trading revenue. So they announced it was going to slow down. Bayer announced that it was some good news, but they do have to sell off $9 billion worth of one of their agriculture businesses. Home building companies, there was too many to report. Home building companies came out and said they're struggling with pricing homes at higher prices. NASCAR came out and said, hey, turns out we don't have as many fans. It's not going well. Saudi Arabia came out and all the oil companies and said, we're worried about oil prices. Athena Health even came out and said he was sorry for beating his wife 10 years ago. That was a true story. I'm not making that up. And then ABC and Disney came out and said, you know what, we're going to cancel Roseanne. So everyone came out with bad news today. So let's go over to the charts and take a look, because there's a lot that we could look at here. Actually, can I just move some stuff around? I don't know what this is going to look like, guys. I'm sorry about this. That is not the way I left it. But anyways, let's go look at the charts. Here's the banks on the charts today. Banks breaking below the 200-day moving average. This is important. What you're looking at here is the XLF, and that is the major global banks. This does not include a lot of the smaller banks, and it doesn't include many of them at all. So global banks, think about Italy. Was it $3 trillion in debt that they have? If things start to go south there, who's holding most of that debt? Who's financing a lot of that debt? It's going to be these big global banks. So the concern today was, well, man, maybe these banks are in for it as far as that goes and may not be able to work their way out. Is this another financial crisis? So little concern there. Long term, here's the deal. If things start to go south around the world, where are people going to put their money? They're going to put it in U.S. banks. Go back to the Grexit. Remember the what do they call it? Brexit. Brexit, not Grexit. The Grexit was the other one. Brexit. When that happened, money came into the U.S. financial banks, the big banks, but it did take a little time, so this is not going anywhere anytime soon. Let's talk about the markets for a second, though. Here you had the Dow down on the day, 391. That's up off of its lows. It was down over 450 at one point, so not so bad there. The well, I mean, not as bad as it was. The S&P was down 31 on the day, also up off of its lows towards the end of the day. The Nasdaq almost didn't budge at all. The Nasdaq was only down by 37 on the day. If you look at the chart over here on the corner, you could see it only sold off briefly. Very strong Nasdaq. And the Russell 2000 almost went back positive today. Remember, that's been your standout index if you're following that over there. So like I said, the banks were weak today, breaking below the 200-day moving average. Technical traders will not like that. That will be a big one coming forward. But if we dig a little deeper, you got JP Morgan, which remember they said trading revenue was going to be lower, down about 4.5% today, holding the 200-day moving average. Morgan Stanley breaking below the 200 moving average, now down over 6%. I think my data is a little off. I'm not getting up-to-date data here. I'll have to check into that. Anyways, if you're looking through this, look at the regional banks, the guys that have no exposure to this Italy, Venezuela, rest of the world stuff. This is your regional banks. They still sold off on the day. That's the only ETF I know of, actually. KRE is the symbol if you're interested. If we go over to interest rates on the day, continued rally in interest rates. Of course, when the markets are weak and everybody gets scared, people run to bonds, they run to short-term notes, they go for this sort of yield, and that drives prices higher, yields lower. So we saw the 10-year go down to 2.78 as of the close here. Remember, we were just at 3.13 last week already. That was bonds. There's notes right there for you on the screen if you're following. Sorry about that. Why does it look all black? I'm gonna need some help. It's all messed up. Try to get some technical assistance here. Anyways, if we keep going, there's just too much to report today. Oil. If we go over to the price of oil, the Saudis and Russia said, hey, we might pump out more oil. Turns out we like this. We might go ahead and start pumping out some more oil here. But remember, for the first time ever, Saudi Arabia is trying to please us for the first time ever in life. So while many are expecting them to ramp up their production, I think around 1 million barrels by the end of the month, no, next month, it's not going to be that much. They're trying to impress us. They're trying to keep us happy. It's not going to be nearly 1 million barrels. I think the technical traders have figured that out. They like this support area. Remember, we mentioned this right here. This is the real trend. When a stock, a market, a commodity such as oil starts trending nicely with nice ebbs and flows, where imagine someone breathing, breathe in, breathe out, breathe in, breathe out, breathe in. You can only breathe in so far before you have to exhale. And when you do exhale, you tend to do it more like that and catch your breath. So that's what we're seeing in the price of oil. So far, the trend remains intact, although it's been a few scary days to the downside. Nobody really cares. Technical traders are happy with that. So 66 is going to be your support level. Individual stocks, I don't know. I mean, Starbucks down just over 1%. They closed their stores about 2 o'clock today. I think all of them. They closed all their stores, at least in the U.S. Racial bias training, I'm not sure how that went. I didn't follow up with the media. I'm assuming they did a great job. Nothing wrong. I mean, companies have these sort of growing pains as long as they address them, and they seem to have tried to address this from that prior incident last month. It seems like they did it pretty quick. How the training goes, we'll see, but stores, I believe, are still closed. And then Apple, you know, not much happened out of Apple today. You can see it was only down 1/3%. There was a newspaper in South Korea. Now, I don't get the newspaper from South Korea. I just read it, right? So they said that they got reports that the company was planning on using, quote, high-end technology in the screens of all of its new 2019 iPhone models. What does that mean? If you're going to report something about potentially life-changing alterations to a phone, why do you say high-end technology? Of course, they're already using high-end technology, so I don't know that I buy whatever they're trying to do over there. That seems like one of those stories that it was an attempt to push the stock higher. If the stock market was higher today, I bet Apple would have been higher on that news. But that, you know, if you read that entire article out of the South Korean press, it seems like a little bit of manipulation. Not saying it, just throwing it out there. Seems a little odd. If we take a look, you've got Hewlett-Packard reporting earnings. Was positive on the news, now headed lower. Let's see where Hewlett-Packard is. Hewlett-Packard is now lower. That's going to put it under the 200-day moving average. They have a conference call coming up, so we'll give them some time. And Salesforce.com, they reported earnings as well. Business as usual there. Salesforce.com is a monster business, tends to do well around earnings, or has lately, was a great growth stock for a while. It is up 3% after earnings. Nothing really new in the last few minutes. You got Target, Ulta Salon, GameStop. Looks like they're all trading at highs as we're wrapping this up here. And that's it. That's all I got for you. Mortimer. Sell Mortimer. Someone understands that reference back there. I'm hoping I can switch to the whole live setup instead of doing this at the screen here, but we'll see. Yeah, banks, semiconductors. Actually, semiconductors held in a little bit, didn't they? Came off the lows there towards the end of the day. Not a bad day for semiconductors. You can thank Micron Technologies for that one. Micron Technologies up 2%. Not so bad. And Kohl's. If you follow Kohl's stores, Kohl's broke out here to new 4-week highs. So something interesting there for Kohl's. All right, I'm going to wrap it up from here. I think I have figured out how to make sure I don't get cut off in the middle of my sort of finishing thing. So, yeah, the iPhone's going to be like $3 grand by the time my daughter goes to college, right? And people are going to pay it. Incredible. All right, enjoy. Remember, class tonight. If you're one of our customers, you're going to get the link shortly. How long do market declines last? Going to use that blackboard back there. We're going to draw it all out. Got graphics. I got stats going back to 1940, 50, somewhere in there. We're going to go over all of it so you know exactly what to expect. Thanks so much for following. If you like something you saw, hit the subscribe button. Help us out a little bit, and we will talk to you later.